Hi, Charel. Good afternoon. Welcome to Time to Talk. How are you doing today?
Yes, very good, actually. Thanks, Paul.
Thank you. To start up the conversation of today, tell us a bit about yourself, who you are, who you're working for, and the topic of today as well.
Of course. My name is Charel Hakkert. 5 minutes ago, I found out that actually I'm like 20 years and 1 month in this industry. So it's like a big milestone as well, I think. Currently, I'm the director founder of MWH Energy, which is located in Utrecht, which is like the small Amsterdam without people. I've got an extensive background in energy. I started 20 years ago at Eneco, start of the market. Trade floor was only 2-3 people at that point in time. So I did everything. It was like risk management, portfolio management, forecasting, all kind of stuff. After 2 years, I moved into what I would call die-hard trading. So that was the age when the Americans were there. There was a lot of trading going on. Started trading the short-term power in the Northwest Europe, purely with the purpose to make money. Shifted to emissions because that market popped up as well. Extended the geographies, gas on the side as well. I did that until, I think, 2009-ish, when I made a small outing to an Amsterdam market maker in options and stocks. Didn't last too long. Company went bankrupt. We were left before that time already. And after that, I joined Eneco again, basically setting up a new desk, because at that time they were big time investing in wind farms. They got big gas-fired assets coming on, which was a lot for that company because they were customer focused at that time. I started working on developing a department, asset-backed trading, which at that time was combining trading and the assets. Started small, 11 people. When I left, it were 52, because the short-term market, of course, was picking up a lot. And like 3 years ago, we decided that we wanted to start our own company. So I partnered with the head at Intraday at that time at Eneco, a quant IT guy, Arjan, with the main purpose to basically trade the short-term markets, because they were hip, they were happening. We expected a lot of volatility over there. In the end, it was there as well. We started with 3 people, small investment from an external investor, just with the 3 of us. And currently it's like 3 years. We kind of established now, so we have 10 people on the payroll, looking at setting up another company, which already has 2 people on the payroll as well. So we're growing.
Thank you, Charel. And to make the jump straight away there with you were talking about Eneco, was client-based. Later, the assets came in. You have a lot of experience on spec trading, asset-backed trading, customer portfolio. When we look at your history there and now focusing at MWH, what was the most valuable type of trading or information that you took from these 20 years at Eneco that you're really applying now at MWH?
It's strange, because it's literally everything. Because what we do, how we look at markets, is we try to get a very deep fundamental knowledge of the market. So we try to get a complete picture of the market. And basically the strategies which we apply to it, it can be anything. It can be something which we derive from the market making. It can be something we derive from the asset-backed trading. It can be something technical. It can be fundamental strategies. So basically, we try to combine all the knowledge we have, so all angles of which you can look at trading, to try to make some money. And if you look at the past 3 years, if you see how fast this market develops, currently we make money way different than we did 3 years ago. And all perspectives have passed. The only thing which stayed is that you keep on developing your fundamental knowledge, because the market keeps on changing, the behavior keeps on changing, asset keeps on changing, everything is changing. So you constantly try to adapt to the new situation to see what's happening and how you can profit from it.
And I like the comments that you make there. I prepared some questions and you already start filling in these questions. So you said here that 3 years ago, you made your money really different. And without diving too much, of course, in the details, we understand it's a competitive market. Can you maybe emphasize on how it was different 3 years ago compared to now when we zoom in, for example, into the Dutch market, our home market as
Yeah,
Dutchies?
of course. I mean, if you just look at the development of the Dutch market, I mean, from origin, it were a few gas plants, some heat-related plants, some coal plants. Then wind started popping in, solar started popping in. Then we got Corona, and after that we got a big boom in solar, basically, which was around the time that we started. So at that time, I think utilities didn't have a clue about how much solar was even on the roofs. Solar forecasting was very bad. Wind was managed less properly than it is today, so to say. So it was, I think, a bit more fundamentally driven market than it currently is. With relatively simple fundamental strategies, you could make quite decent money. And after that, of course, when the assets became more mature, you got more traders, power plants becoming more advanced. Everybody started reacting. So the game has evolved to more digging into what's actually happening to the system, because the current state is that you can be solar short, but the market can still be long on all different markets, so to say, which has to do with how people react.
And I hear you in your story that fundamentals play a significant role in Holland. And what I can share as well, that with our market registrations at Time to Market, we also set up new participants who really focus on algo. And we cannot see all the details, but there's of course just standard algo strategies on breakout, price action. Do they stand a chance in the Dutch market with just simply applying back-tested algos?
Some do, some don't.
It depends, of course. Yeah.
No, it depends heavily, because it's like I said, you can have the same fundamentals and you can have a complete different outcome in how the market is currently, because of the solar boom and the flexibility values, which are currently quite high. I mean, there are so many people and so many companies, so many traders have been attracted to this market, and they're every day reacting to what's happening these days. So of course there is some stuff which is working, but there's also some stuff which you think work and you get punished big time the day after. And that's exactly what we try to avoid by picturing the complete picture. Yeah.
Can you make a statement if looking at the last 2 years, let's say, how we had the whole energy crisis, of course, 2022, where all the prices went absolutely bananas. We have seen a lot of inflow of new participants. Do you dare to say that these new market participants in, for example, the Dutch market have already affected on how intraday prices or imbalance prices typically behave?
I think the most positive thing is the liquidity on the cables and the grid net, because if you look at the market, sometimes liquidity wasn't there at one side. It had to come from the power plants, it had to come from UK and stuff like that, because there were not too many people over there. They charged big premiums to basically get into that side of the market. Now, if you look at current grid nets and how many people are active over there, premiums have diminished, which really has a big good impact on liquidity, because it's easier to get into your position on one side than it was like 2 years ago. So that's a positive thing. The other question, like how did it influence the price? I mean, in the end, it's more what fundamentally happened, what changed the price dynamics in the Dutch market. Because in the end, we went from like 14 gigs of solar 2-3 years ago to 25 currently. So that's a real big boom, which is there. And that changed the dynamics of the whole market. Because like 2-3 years ago, we were able to export our solar to surrounding countries. And now the surrounding countries are also importing to us when we want to export to them. So suddenly, where in the old days you got a price and a good price for your solar, sometimes you get zeros or even more negative. So the price swings on that are much higher than they used to be. And that's a dynamic, which is just a market dynamic. It has nothing to do with the traders. For example, if you look at assets, if you look at wind, there's a big change in how these are managed. If you look at wind at land, for example, there's a lot of subsidies involved. So they behave much different than the latest two additions on the North Sea, like 𝐜𝐴N and 𝐜𝐴Z𝐧, which are fully merchant plants. So they get the full exposure on their profile, on their imbalance and stuff like that. So they're completely different managed than the wind on land. So what you see is that, for example, when wind offshore, is the boss, it's marginal. So for example, in the last 2 December months, when demand was really low, there was a lot of wind. The wind offshore is the boss. They are the marginal plants, and basically the market is, from a trader perspective, maybe a bit boring because there's not too much happening, because the upside and the downside is fully managed by the wind. And that's something which is new to the market, because in the old days, it had to be the power plants balancing the country. The same you see happening with solar. In the old days, it was just selling it and take the imbalance. And now the prices become zero. It becomes like an option. So you can use it to steer down very easily. When you steer down, you can easily steer it up. So steerable renewables have changed certainly a lot. And there's a lot of different maturities. Like I said, 3 years ago, people didn't know solar was there and how much solar they had. So it was impacting a lot on the imbalance market. And after, for example, last Easter, when the prices were really low, you see that a lot of people are actually controlling their solar assets way more than they used to do in the past. If you look at power plants, there's asset ownership exchange. So you had some merchant power plants shifted in other hands. You had some 𝐜𝐴Z𝐧 clusters shifting into other hands. You see the operations desk managing those power plants, becoming more responsive to the market. Too much to tell. But in the end, it's all about, you have a price, the price gets extreme, people get hit or see an opportunity, and they're all shifting to that. So that's exactly what happened in the Dutch market, based on the extreme intraday, but mainly the extreme balancing prices in the past. So I think that's more important than just a few traders doing things.
So basically, you are saying here that the market really improved. That, of course, prices have been extreme, high prices, also low prices, due to that very high supply. But basically, more market participant has made the market more liquid. It's easier to get into a position, easier to get out of a position, and also due to extreme pricing, people with assets started optimizing their assets better, leading to a more efficient market, basically.
Yeah, and that's not only the power plants. It's the wind, it's the solar. We've got an explosion on batteries lately, because I didn't even touch the subject of.
You are just running ahead of me now.
Yeah, maybe it's a good moment to just touch it now. I would
Let's
say.
do that. Yeah,
because there's a downside to everything which happened now. So we got the huge solar getting in. So we had a lot of solar power up to the 24 gigs. But on the other hand, we also try to get rid of gas. Groningen has been shut down. We don't want to be dependent on Groningen. So we had seen massive electrification. So that means we have a lot of heat pumps. We've got the charging poles, everything. And what you see is that, especially in the bit older neighborhoods, like you see behind over here, there's huge congestion problems. So, few examples. Just in my street, around 5 o'clock in the afternoon, when everybody comes home, puts their car to the charging pole, it can't, because people are cooking, heat pump is running, so we're reaching the top of the system over there. 2 blocks away from my house, people have solar on the roof. It just kicks out at 11 o'clock in the morning because there's too much voltage. So there's congestion in every level here. The city, now, for example, the city of Utrecht, which we currently are, is now trying to solve those issues by doing all kind of bilateral deals with people who can support the grid. So they are dealing with a big CHP, which is located a bit along the road, negotiating with people, getting a small gas engines to the grid to support the grid. So you've got, sometimes you get a disconnect between the high voltage grid and the lower grids, which sometimes have kind of an opposite behavior, because the lower voltage grid can be congested when the high voltage grid is not. So you get mixed interest currently in the market, which the market system is not fully capable of solving now.
So are you then also suggesting that this whole electrification with more charging, more solar production leads then to gas units being more active to just absorb, offer flexibility to stabilize the grid?
Yeah, temporarily until the congestion is gone, isn't it? So what you see is that, for example, in my neighborhood, they have to fix some kind of mid-voltage transformer, I don't know exactly, and it's planned for 2028. So in 2028, then suddenly most of the grid is relieved again. You see that in all places on the high voltage grid, everybody's building. So it's good. So it's temporarily until they have fixed it. And of course, the gas engines and the CHPs are a bit extreme thingy, but we also see pilots with batteries, of course, which can relieve grid congestion, stuff like that. So it's not. Now the gas engines are more specific for this region. It's not
not a general issue. No.
Exactly.
And yes. When we talk about the batteries, we can also look, of course, at the trading aspect. So not purely the functional for grid stability, but how valuable can a grid scale battery right now for trading on intraday imbalances, flexibility, whatever. What is your standpoint on that from a trading mindset?
From a trading perspective, having a battery, of course, is nice because it gives you an option on basically all the markets. What you see happening now is if you look at the deployment of the batteries, there's three things. You've got like the real up to 0.1 megawatts up to 2 megawatts or something being deployed at a very high pace, especially for the congestion areas. So for example, in my neighborhood, if you want a grid connection, they say you can only get a very small one. Yeah, you can only start a company if you take a battery in combination with, for example, solar power, stuff like that. So you see a lot of those coming in, a lot of small ones. Then you have the grid scale ones. We have a few small ones. Currently, 30 megs is a bit what's coming online, and we are now basically the next wave will be the 50, 100, up to a 300. If you look at deployment now, it's a bit different use cases. Of course, it's the co-located ones next to solar. You've got the ones where the main purpose is, for example, relieve the grid congestion, and others are just deployed in the market. And deployed in the market means basically steering on the imbalance market, which of course has quite extreme prices recently. And what you see now, which is kind of the trend of the last few months, is that because the revenues on the imbalance are so high, that, for example, you can just buy a home battery with the sole purpose of trading the imbalance, just at home.
It might not be suitable for all retail customers, but there might be a few out there.
Of course. The use cases, like, okay, where do you make money? Of course, it's because of the high imbalance prices and the high volatility on the intraday markets, and I would say okay prices on the TSO markets. I mean, people are currently making good money with these installations. The big question, of course, is if we go to grid scale, and then I mean really like 50 megs, 100 megs, 500 megs, the real big units, its utility will be a bit different, isn't it? Because especially the imbalance market is, you cannot deploy thousands of megawatts over there, and it stops at one point in time.
Sensitive.
Same for the TSO markets, for the AVR, PCR, those kind of things. So the main utility will be ramping up on days when sun suddenly is not there, days when the wind is suddenly not there, and simply replacing peakers in summer. issue there is that the price incentive is not really there, especially if you want to replace a peaker and you want to do more volume against different margins. So for me, especially if you combine that with relatively high grid costs in the Netherlands, it's a reason why I completely don't understand why we don't have a capacity market yet, for example. Because if you want to go bigger and deeper, which we really need in the end, I think you should give an incentive to the market to actually build those things. And now all the cases that we have are more concentrated to the balancing markets. Well, of course we need that, and it's a good thing they're there, and we're happy they're there. But in the end, we need more than that.
Do you think it will lead to a big issue if it won't be there within a few years?
No.
No.
No. No, because if you just look at what's going to happen, we had the big solar boom at the moment. So we are up to the 25 gigs. The government also abandoned the netting of your power which you produce with your solar panel, that you can net it with power that you take from the grid in winter, sorry.
The soldering.
So the solderings, there's big discussions going on. Currently, you see a lot of solar builders already now almost going bankrupt. So that stalls a bit currently. On the other hand, if you look at the real big wind expansions, the real big ones, and I mean the North Sea, it's all 2030 and further, and in between we will only get like 1500 megs still there, which I just explained is really advanced stuff. It's set point steered, it's wholesale, so it's causing issues, but relatively small issues.
Manageable.
Yeah. If you look at that side of the medal, then the problem is not increasing significantly in the Netherlands. In the Netherlands, I say, because
we need to focus on one market in today's conversation.
Yes, and on the other hand, we say there's like 69 gigs of batteries in the pipeline, which of course is ridiculous. So the question is, how much is going to be built, which is mainly a financing story. But basically, it doesn't matter how much is being built. It will just relieve the problem, I think, if you ask me. Yeah. So the big unknown over here is actually how much the problem will increase. How much of the German or other countries' volatility will enter the Dutch market. Because I can also think of a scenario where Germany expands big time, all subsidy driven, so it just hits the system, and the Netherlands cannot cope with it because basically we're drowned by the capacity over there.
So we need EU cooperation to tackle this.
Yes.
To make one jump back, earlier you mentioned that the action needs to take place when on a specific day there's too little solar compared to the forecast. And then I had a question pop up in my mind that my background lies in the day-ahead market, of course, the 𝐓𝐚𝐿, the pricing of all CWE, the pan-European prices. But that's all total forecast, of course, for a full price zone. How important is it now in the Dutch market to not only look at the total forecasted production, but also really localized production?
Now, to be honest, I mean, the whole dynamic of the negative prices and the zero prices means that there's a lot of curtailment, and that the solar panels and the windmills are actually used as options. So for us, the things that we try to do is to complete the picture of the market. Is you want to get a view of that behavior. You want to know when people are curtailing, how they are curtailing, why they do it, when they do it. Just to see like how much slack is in there, because in the scenario, winter, holiday, low demand, a lot of wind, and there is like a gig of offshore wind power which can ramp up, and you've got like a gig which can go down. Yeah, basically nothing is going to happen. But in the scenario where we are non-curtailed in a weekend, with no power plants running, these are now potential issues, because it's You need to ramp something up, which doesn't want to ramp up for 1 or 2 hours.
Is that also when you see the most surprises on, let's say, a day ahead price or maybe an intraday price or even an imbalance price, the weekends? Is that really where the surprises are?
Mostly, yes.
Is that then also where the money is made?
The weekends now are going to be the weekdays of the future, isn't it? So
2 days work, 5 days off.
no, no, it can happen anytime, isn't it? Because especially in shoulder seasons where you have wind and solar, you can actually reach the same state on a weekday, depending on what your neighbors do. So it's not only concentrated to the weekends.
And when we look at the spec trading, the curve, people are always looking forward, of course, to the Q4, the Q1, there where the call is, or it isn't, at least the volatility. We have the Christmas period, of course, where everyone is nervous before, afterwards, often disappointment. Do you also see that kind of seasonality within the spot market in Holland? Or is every day a new opportunity to make money again?
No, man, just look at last month. I mean, it was very wet, yeah, in the Netherlands. There was a lot of rain, the soil was humid. And basically that means for the Netherlands that clouds are all over the place. They come in, they disappear, suddenly they pop up again. So we had a lot of volatility on clouds and as such on the forecast and on the prices, of course. If we would have had a nice spring, blue sky, nothing happened, the market can handle. Only they need to curtail a bit on the weekend days a lot. A lot. But they can handle because there's no volatility. So every day is different and it can happen every day.
So you don't need your seasonality, you just need volatility in the weather, so to say.
Seasonality. Winters are more boring than summers actually, because of the fact that wind in the Netherlands is quite advancedly steered. So there's a lot of renewables just steering the system over there. And as it's wholesale, people get the full exposure. They don't let it happen that they take big fines on the imbalance and stuff like that. Of course, they cannot avoid it every time, but at least it's properly managed. When subsidies come in, like on solar in summer, or when wind on land is dominant, it changes the picture.
And you see that back in the prices.
The prices, how flexibility is steered, how exposures are managed, everything.
One question, and you might not be willing to share this, but of course we have the audience. And when we look at spec trading in the Dutch market, what kind of hint, the practical tips and tricks would you give to the others out there? Where is the money, or how can you optimize your own strategies on intraday and for the imbalance?
It's like I said, it's about getting the picture right. And the Netherlands is a small country. It's next to the shore. It has its own weather patterns and stuff like that. So for us, it's about getting that picture right. So that means wind, solar. What are all the actors doing? So how is it steered? How are the power plants acting? What are the borders doing? Yeah, and especially the weather. I mean, it's so volatile and so specific that you cannot do this with only generalized models.
Do you need to know a lot about the Dutch farmers, the greenhouses with all their imbalance actions? It is something, of course, that was always discussed before. Is it still happening in the same manner? How much do you need to know?
Everything. Because it's not only the farmers, it's literally everybody, everything is moving at the time. Windmills, solar, farmers, power plants, and every day you have a different configuration. So every day you need to know about what's happening there.
And there you can see then as well that the sum of a lot of small parts can still have a big significant effect.
Yes.
So it is about the full picture.
Yes, and don't underestimate it. I mean, it's a lot of work. If you just see, for example, what we did with getting a demand forecast properly, you can take the ENSO data, but in the end, we just took the high voltage grid map to see what's actually in the data. And then you see that you need a lot of corrections to actually get good data. So it's a lot of work. Yeah.
I can imagine. Yeah, it took you 3 years to be where you are, of course. Yeah. Looking at all the data, how many % of your staff is really working on data crunching, AI, modeling, auto trading, etc.?
7 to 3.
Yeah.
3 traders and 7 on the other part.
So you could say there is a lot of experience, many decades altogether, of course, a lot of fundamental knowledge about the Dutch market, but still you are also a quant shop, basically combining the full picture.
I wouldn't rely on one of both, on one of them. I mean, in the end, it's about getting your models as good as possible based on the feedback from your traders. But I would never fully rely on them, because when they fail, that's the moments where you can make a lot of money. Huh?
And you are, of course, director, you manage your whole team, you are busy with investment decisions, hiring. Are you behind the screen sometimes?
Sometimes.
Yeah, so you are still very much into the trading as well?
I'm fully in the trader shift, yes. So I make, like I said, like roughly 60 hours a week behind the screen.
That is just fantastic, that apart from just running the whole shop, you're also still capable of trading and making some money, obviously.
That's the reason why I started this, Paul. I mean, we're in the best business there is, combining the physical with the trading. So that's why I do this. Yeah.
So you are a happy man.
I am.
Fantastic. Charel, I think we can slowly round off. I think we touched many of the topics. I had some questions, and I think we naturally walked through most of them. So, is there any other topic or thought you would like to ask while we're speaking here?
I think I just wanted to thank you, Paul, because I think we were one of your first customers. Huh?
Correct. Yes.
At that time, we were with 3 people and not a bank account with tens of millions on it. So it was quite hard for us to get all the banking stuff done, the licenses, the exchanges. And it was something that at that point in time, we really didn't want to spend our time on, because we were building the fundamental engine. And you just helped us tremendously with that, especially not only going for the licensing stuff, but also to fix what was needed to get that done, as us being not the first company a big bank would run for, really helped us a lot in the expansion and also in the expansion of the company. So thanks for that.
Thank you, Charel, for these positive words. And it's what we try to do. We always appreciated your support. You were indeed one of the very first clients of Time to Market. And we also appreciate your support, of course. And you allowed us as well to grow into new markets, to get experience, of course, with what kind of different profiles are there in the market. And we are very happy that we're able to support you on the markets we have set up and the markets we are going to set up. And I think this is a natural match of you wanting to build a business, focus on your key hires, your algo, sitting behind the screen, and something as market access is, as you have stated, not your priority. You want to have it, but you don't want to do it. And I'm happy we can help you there. I would like to thank you very much for today, for your presence and sharing all your knowledge about the Dutch market, both personal experience, but also the fundamentals and what's going on with the audience. And I hope you enjoyed our talk as well.
Thanks, man.
Thank you, Charel.